That's the day so far. Welcome to Closing Bell. I'm Anuj. With me is Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. So it was all sort of downhill. It was one gentle sloping plane down till now this last tick that's kind of coming in. Some of the banks I think are getting excited. But what do you make of the day? Otherwise it was just disappointing all throughout.
I think there's two issues here. Nifty obviously has underperformed the bank Nifty today. And that's purely because of IT. I think TCS numbers clearly, that's rubbing off on the entire IT pack. What today has also shown you is that, you will still get a good money by buying the dips on the bank Nifty. On the Nifty, of course, because of, TCS and this continuous one-way downward slide. And by the way, even the morning point that I thought on Infosys, I'll have to seriously reverse that now. Because even on Infosys, it clearly looks like the market is now, starting to worry a bit. So that is point number one. But like Kotak is seeing some buying. I think at lower level, ICICI Bank has seen some buying. And like we discussed, I think on Awaz in the morning, PSU banks, they normally see selling in first half, then they see some kind of buying in second half. I think you're seeing that play out a bit in stocks like Canara Bank. So I think the cleaner play today has been on the Nifty. Where you perhaps have made more money by shorting.
One-way trade down.
Exactly.
Yeah.
On the on the financials, it still remains the stronger pocket. The index is down only 0.3% and it's trying to take support at lower level. Having said that, the market's a bit overbought in the near term. So perhaps this was necessary, and now you're making a move towards the lower end of the range. So far holding. But let's see, if we get away with 10,000, say 700, 720, Surabhi, we would have made a higher bottom. But let's wait for market to give us that verdict.
Also, the mid-cap sort of performance has been very lackluster this week. So that's something that we also take on board. Far many declining stocks than advances in this afternoon session. On banks, this has been an interesting, actually banks and one more stock. It's been an interesting week for Tata Motors and also Yes Bank. These two absolutely beaten down dogs, where there were some long trades that were being tried out. But I don't know, do you think that is still working?
Look, Tata Motors, all rallies would be bear market rallies. And that is one thing you'll have to be really, the market gives you a verdict that bear market rally is over, you out. These bear market rallies are tradable, but only if you're, the larger trade on Tata Motors is still on the way down. And that, I think perhaps, it needs to go towards that 150, 140 mark that we discussed before some buying comes in. I think on Yes Bank, it was clear. I think the way yesterday evening, there were, WhatsApp rumors circulating with the one big name, it was very clear that, people are stuck in Yes Bank. And I think it's clearly now gone to the higher end of the range. A lot of people are stuck here. It's now moving lower, and it should not surprise you if you start to see the stock again making a move lower. And if you got in at 150, then perhaps 190, 195 was a good zone to take some money home. For me, it would be interesting to see if it has to make a journey back towards that 150 mark. Because remember, when the fiasco broke out, it took support at 180. Then from 180, it had a 250, rallied to 250. Then
again came back to 180.
It came back to 180 once it broke that, and it violently fell to 150.
Yeah.
Now on the way back up, now 180, 185 is acting as resistance. So if you go by that theory, I think perhaps a move towards 150 is due on Yes Bank.
Okay, let's see how this plays out. We have a lot of ground to cover this afternoon. Here's what's lined up on Closing Bell today. It is mostly red across the screen, with the market just off the lows of the day. Reliance, L&T have been key drags on the index. IT heavyweights, TCS and Infosys also on the lower side of the screen. TCS, of course, struggling on the back of the margin miss. Street is awaiting numbers from Infosys now. We will be discussing all of these fundamental trends with the experts, Prakash Diwan and Kunj Bansal, joining us on the show today. We also get you a slightly longer term technical check on this market, along with some trading ideas. If this is going to be a trading range, then what are the individual stocks that you can perhaps work with? Jay Bala of Cash the Chaos joins us on the show. Global as well as domestic cues continue to weigh on the market sentiment so far in 2019. So what should be your portfolio stance? We get chatting with Ganesh Ram Jayaraman of Spark Capital. And from a fund manager's perspective, today our alpha manager on the show is Gautam Sinha Roy of Motilal Oswal AMC. But before we get to all that action, as always, Ashwini Gujral with lots of trading ideas.
Okay, in fact, last hour calls right now with Ashwini. He's with us. Ashwini, good afternoon. So, quite a bit of recovery actually from the low point on the indices. More pronounced on the NIFTY Bank, not as much on the Nifty 50. Your thoughts for last hour and what would be your stock calls?
See, hardly one sector, which is FMCG, is positive, rest everything is negative. The other point is that if you see the Brent crude chart, 61.9 USD was a fairly key level, and Brent has broken above that. That was about the 20-day moving average. Now, according to me, that is some kind of a breakout, and you could have, you know, $5 to $6 upside from here. Now, if that starts to come in, then it should be very clear that you know, the range expansion that we are all waiting for will happen on the downside. Today it hasn't happened, but the entire market has weakened. So just, you know, if we come back Monday and crude is at 65, then chances are we will get it. 10,750 is that line in the sand where the range breaks and the Nifty moves lower. Similarly, on the bank Nifty, broadly, you know, it's also beginning to give up a lot of ground. Today, corporate lenders, as in PSU banks, etc., have not participated. So for the moment, we have put positions on bank Nifty because it's choppy. It's not going up or down. It's just choppy. And once you get that event, rupee is also weakening. I think the market is positioned for downside breakdown on bank Nifty. Now, having said that, individual stocks, Tata Motors is a sell with a stop of 184, target of 120. Srey Infra is a sell with a stop of 36, target of 32. And KRBL is a buy with a stop of 318, target of 334.
Some of these rise stocks have actually been quite excited in this week. They've put on some serious weight, some trades being taken on the long side. Thanks, Ashwini, for that. We will come back to you in a bit. We have Prakash Diwan joining us on the show now. Happy Friday to you, Prakash. Those who were thinking long, it's not been a happy Friday or a happy week actually for them. Absolutely range bound. Let's talk about the big IT names first up. TCS, would you buy it?
You know, at a price, everything looks good. And TCS seems to be moving towards that very rapidly against what I expected. I thought the margin compression was probably something that we could live with, but it seems like it could probably continue in the renewal of contracts that would come, that would be due for this particular quarter and the year going ahead. And there could be a possibility that they are also compromising on margins because the pressure to grow on the revenue side is significantly higher. So any subcontracting work, any kind of, you know, quarter where there are a number of days is less, that is going to keep on impacting the margin. So that's the worry. But I would definitely, you know, closer to 1800, definitely it's a buy because in the long run, it has the resilience to come back and ride the curve. So I wouldn't be very disappointed after buying it at 1800 levels. But given relative strength, it seems like there could be some money flowing into Infosys from TCS. If Infosys comes with a shade better numbers and you know, the promise that it made last quarter continues in its numbers. So if that were to happen, TCS could then lose some further ground from what it has already done today.
Okay, Prakash, nice background in the back. It's looking quite good. Good TV. Good afternoon. Your thoughts on IndusInd Bank as we speak, making fresh lows, breaking down. In fact, I think it's now below result day low.
Yeah, and which I think, you know, it's difficult to draw any kind of a conjecture in terms of how diverse the reaction has been from what Bandhan Bank did to its LNF's exposure and to what IndusInd did. And then essentially, IndusInd is, trying to be too optimistic and maybe, the kind of exposure that they have to the group, if RBI were to clamp down and get a bit more serious, then it's going to be a significant impact. And people are already kind of factoring that in. So my sense is, once it kind of loses some more ground, it would be at a level where people expect it to be realistically there. And the bank management probably was too optimistic by not making that significant provisioning. So it's a little bit of a mismatch. The other concern with IndusInd numbers has been the slowdown in growth and, going forward FY 19-20, probably the numbers in earnings itself, could misestimate. So that's a little bit of a concern. So if there's a pickup in the CV cycle and the Bharat financial business starts contributing significantly, I think it could probably be ignored or left sideways. So not much of a spark there. And I do believe that the brokerage, recommendations that have come, the ratings that have come, even the lowest one was slightly higher than what it was yesterday, at least when it came. but that could still be some time away that it goes into that 1700 plus zone.
Okay, all right, Prakash, stay on with us. As promised, let's look at technicals over the range. I mean, this 400 odd point band that we've got on the Nifty. Jay Bala of Cash the Chaos is now joining in with some thoughts. Jay, thanks for being with us. I mean, I remember we spoke a couple of days ago, I think it was just 2 weeks or so, and you did maintain that at least 10,600, 550, 600, that's a zone that should hold. Now that we are stuck in the middle of the range, would you take a trade on the Nifty or the Nifty Bank, or would you just say stick to stocks?
Yeah, it's better to stick to stocks, but I believe last time when I was there, I said the markets are very close to the 10,600 support, and the market bounced from 10,618. So the markets are pretty much doing what is anticipated of it. So far there is nothing to worry about, even if the markets are stuck in the range. In fact, the banking index is slightly more bullish than the Nifty. So So I would think soon one of the private sector banks, or probably one of the PSU banks, will join along with SBI and give more thrust to the banking index. So I'm still positive on the market. Taking a trade on the Nifty, as if it comes closer to 10,600 for one more time, I'll probably take the trade. Or if you are a little more aggressive, probably can even expect 10,720 to hold. But that should be a strict stop loss. You can go long with a stop below 10,720.
Okay, Jay, hi, good afternoon. What are your stock ideas? Interesting, a couple of these names which have corrected a bit, like Page Industries, but there are a couple of others as well which you have, and there's a shorting idea as well.
Yeah, I have three strategies today, two on the long side, one on the short side. The first is just on Pidilite. Pidilite it had formed a double bottom and went to record highs. I had even tweeted about this, and Pidilite has now pulled back from those highs to a perfect Fibonacci retracement of 38.2%. So that's telling us that it's probably embarking on the next leg of the move post that correction, and I'm expecting record highs once again past 1250. So and it looks like an easy low risk reward trade at current levels with the stop below 1070. Page Industries, this was my Diwali pick, and I'm still very bullish on it from a medium term perspective. The chart setup says that it hasn't completed one more. It's got one more pending record highs to come through. So the chart structure says that what we saw at the recent low is actually a double zigzag under the Elliott wave model. So I would expect some sort of reversal to come through at current levels. It had a reversal and a volume exhaustion. Recently it made a low at 21,600, and I'm expecting this to do at least 26,250 in the short term. And so one can place a stop below 21,600. UBL is the other stock on the short side. This has been struggling around 1410, 1415 for a couple of times now, and it's starting to look like it's going to see some sort of a correction. Don't know if it's going to be to 1300 or maybe a deeper one to 1150. So hence a short trade here with a stop above 1420.
Jay, interesting. Since you've picked out two stocks that have underperformed in the last several months, Pidilite and Page. I mean, I think this is something the market, at least portfolio investors, are really looking for. People are asking themselves, should we buy a Ashok Leyland? Should we look at buying a Motherson Sumi? I mean, even Tata Motors, if at all, if it's making a bottom in this bear market of its own. What is your advice on auto for those who want to add these stocks to their portfolio?
Autos, I think they are a very interesting juncture, and I'm sure we're going to see some sort of a positive surprise come through for auto stocks, but you got to be very selective. I don't know if I put in a call on Tata Motors in November when it was about 160. I said it's going to go for 195 to 205, and that's actually unraveling as expected. And there's a big pattern that's shaping up on TVS Motors. So I'm very bullish on it as long as it holds about a 505 to 530 zone. And I think the end of the pattern is very near, and I'm waiting for a one-day reversal to come in there. So watch out for some positive to come through in the auto space. All
right, Jay, thanks a lot for all those trades. By the way, just look at intraday chart of Mindtree, and I tell you what would have happened here. This early in the morning, based on TCS, if there were a lot of short positions which perhaps were taken on mid-cap IT stocks, and Mindtree is normally the first one that comes to mind in terms of punching bag. Now, the stock never fell, and after that you're seeing I think aggressive covering, because normally ahead of last hour you don't want to keep your shorts open. This could really get interesting, Surabhi, because even though it's up only 0.7%, but I think if you're seeing the chart, you can easily see a lot of people stuck here on the short side. So that could be quite interesting. Okay.
Actually, Anuj, it's Mindtree in the mid caps, and even some of the bigger names like Infosys, Tech Mahindra, HCL Tech. A lot of the IT names seem to be at least trying to get off the lows of the day. Not sure how that plays out, but I guess overall as well, there's at least some bounce from the lows that's coming in on these stocks.
Yeah, I think clearly there's been a bit, like we said in the morning as well, don't extrapolate TCS into the sector. It could be a completely, different issue with some of the other companies. So that's how perhaps it could be playing out.
It's a new year and we have a new benchmark bond. So there you go, the ticker is telling you that the rate that's come in at the end of the RBI auction is about 7.26. Yeah, so the coupon of the new 10-year, 7.26 is where we are. Of course, a far cry from the 7.5 that the old 10-year, the 2028 paper had touched. But anyway, this is the new level that we work with. Let's now get back to the equity market action and some more trading ideas coming up for you. Sandeep Wagle is joining in. Sandeep, what are your bets today?
Afternoon, Surabhi. I would go with a buy in a Torrent Pharma, stop loss of 1850, target 1930, and a sell in a TCS, stop loss 1854, target 1800.
Okay, that's some trading ideas. Sandeep, thanks a lot for those ideas. HCL Tech is now at the high point of the day. By the way, the stock that we had in a spotlight yesterday, ITC, a day later perhaps, but making a move, just pull out that stock once again. I think it's quite a bit of contribution to the index that's coming from ITC, and it's been the case for some time now. Prakash, is this the final coming of age of ITC? It's flattered to receive so many times, again attempting a move towards 300.
No, absolutely. So let me comment on your earlier mention of the background here, and somebody commented that are you sitting in a situation where your back is
against the wall? I was just thinking of that.
And if you were to
exactly my thought. Someone's reading my mind, Prakash.
Prakash, the wall is trending today. You know that, right? It's a top trend.
Yes, it is.
It's Rahul Dravid's birthday, so one of India's greatest ever batsmen.
Absolutely, absolutely.
Yeah.
No, so absolutely. So celebrating that fact, it's just literal. It's not figurative. And if I had to actually give you a buy call, and I'm glad you asked about ITC. I think people need to understand that in a sector which is as wide and deep as FMCG, if all stocks were to rally and get multiples which are fairly rich, and there's one stock one company which does well, and we treat it so differentially, negatively, it can't last for too long. The aberration has to correct itself, and that's exactly what's beginning to happen in the case of ITC. And the trigger, I think, was a couple of days back, this whole thing on the sin tax, which was likely, has been kind of redefined to be much more dilutive and much more muted as compared to what it could have been. It could have been much more draconian for them. And that's exactly where, all the pent-up buying that was waiting to happen in ITC is begin to happen. And I've seen the numbers, the delivery numbers have been encouraging. And if it were to cross a couple of those thresholds and milestones, I think ITC could probably see a significant move up from here. So HUL could lose ground and ITC could gain. That's what seems like. The way TCS is losing ground, Infi could possibly gain. I think there are a lot of these pair trades that are emerging very clearly. And ITC absolutely is up for right for the picking.
In fact, just pull out Infosys intraday chart now. And this is, this is just, in terms of explaining how perhaps things move. Discussing this in the morning as well. The first half trade would come in TCS perhaps. The second half trade on the reverse side perhaps would come in Infosys. Because, you would, you tend to get short on Infosys as well, extrapolating what TCS has done. But just look at that move. Having said that, going into any IT result this quarter with any kind of positions perhaps can be risky.
No, I totally take your point, Anuj. Yeah.
I think the trade was perhaps intraday today in Infosys. From whatever point it reversed to perhaps try a long trade. But you would want to go into the numbers with a clean slate, because you don't know what could happen in this quarter with some of these companies. So, and they are sitting on a bit of a rally. So Monday morning, if you come with clean slate, I think you'll be perhaps better placed.
Absolutely, and there are a couple of triggers going for Infosys. First of all, unlike TCS, where the market was hoping for margin expansion, here there is no hope. I mean, flat at best. And now the TCS has spoken about of struggle around the margin front, talent issues, costs going higher. Maybe the street will give some benefit of doubt to Infosys as well. And then, of course, there's this cash utilization. Everybody wants to know bonus, dividend, what are they coming up with? In fact, on that note, let's actually introduce our next guest on the show as well. Ganesh Ram Jayaraman, Head of Institutional Equities at Spark Capital Advisors, is now joining us on the show. Ganesh, good afternoon. In fact, I will make that my first question. These IT stocks are at an interesting point. They have cooled 10-15% from their peak. We've dealt with a lackluster quarter and some of these headwinds like wage costs, visa costs, margin issues. So what do? Would you still buy Tier 1 IT?
Good afternoon. Hi, I think IT is a sector that we have been quite overweight on through the year. We do realize that there are headwinds emerging into the sector. Lesser on margins, more on how we see demand front. Will constant currency demand start moderating as the year progresses? So while we are still recommending an overweight stance on IT, we have moderated our expectations, and we do believe that returns on IT will be moderated. If it's possibly the best case, it will track earnings growth. So earnings growth expectations of maybe double-digit top line growth and maybe at best mid-teens earnings expectations is what we are expecting, and stock prices should possibly best case reflect that. We do believe that we need to keep our eye out even more, and if we see demand expectations starting to moderate, not just margins, then I think we will start getting a little more skeptical on IT. For now, though, our overweight stance on IT kind of continues.
Okay, overweight stance continues in IT. Ganesh, hi, good afternoon. Your overweight stance on consumer staples is also quite interesting because staples did correct quite a bit, but that correction was bought into and how? Back to all-time highs.
See, through 18, we have been cautious and we have stayed away from the cyclicals, the rate sensitives. Even in some form, we have been questioning discretionary consumption moderating, especially on autos. We have been positive on staples though, and we believe that big ticket or larger ticket size, especially leverage backed demand, will start moderating more, and we do see that trend to continue through calendar 19. Staples, I think we're more positive on staples because those companies have historically demonstrated far better pricing power, and their ability to get demand from rural, and the nature of demand is also not leverage backed or it's not a discretionary in nature. So it tends to be more evened out, and that helps always from an expectation standpoint from an investors. When you see rate sensitives or when you see demand moderating, you will want to have sectors where earnings are largely certain, and from that standpoint, staples do offer that. We have been positive on staples through 18, and we continue to believe that those sectors, even though they are extremely expensive on valuation multiples, provide investors with reasonably certain earnings growth, and that I think has a premium in a market where there aren't too many hiding places, and staples do offer that.
Okay, some interesting developments on Yes Bank. These are sources telling us that the first candidate that's been recommended by the board to the RBI is actually an external candidate. Typically something that I suppose those who look at these things minutely would take heart from, that they have gone, of course, beyond the internal talent to look at, of course, external names as well. So 2 names, that's what we are picking up for the time being. Ganesh Ram, so, you seem to be underweight on financials, at least that's what the note said. Now, help us understand this. What part of financials? Because on one hand, you have these corporate banks, Axis and ICICI, they're running away, and expectations are riding very, very high this year from these stocks.
Yeah, see, financials where we are more skeptic on is the wholesale liability NBFCs and wholesale liability banks. Retail liability, CASA driven franchises, especially if they are wholesale asset mixed, that's actually an ideal mix to have. We do believe that there is pricing power to an extent in wholesale banking today. There are a handful of banks with the ability to lend, and that gives them some pricing power. Retail assets, wholesale liabilities is a bit of a dangerous mix. A lot of NBFCs and some banks fit that bucket. So we are cautious on that, and so is on life insurance. That is something that we have been kind of cautious through the year. But yes, corporate banks, especially if they are retail liability, CASA liability funded, they are ideal mix to have. We do see corporate NPAs have possibly peaked out, and before that starts, that you're also seeing some very good signs on credit growth, especially working capital led, also a tailwind. We need to keep one thing though in mind, though we are not really thumping the table on that. We are keeping a kind of eye out or looking behind our shoulder, figuring out, are we seeing the first signs of liquidity tightening, or deteriorating retail NPA? So the way we define NPA is not inability of an individual or a fund company to repay, it's inability to refinance. And when liquidity moderates, when NBFCs or various other the shadow banking starts slowing down growth, inevitably there is some pocket where you will see some repercussions, especially on ability to refinance start. So that's something that is one of the reasons why we are skeptical on financials totally.
Okay, by the way, the move on IT is now very interesting, and in fact, it's meant that even the Nifty has cut its losses. The Bank Nifty anyway was positioned for a short covering bounce, perhaps in last hour. That played out, but on the Nifty also now you're seeing a bit of a move. Tech Mahindra, for example. Now, Infosys, perhaps it got as per script last hour move on Infosys, but Tech Mahindra is quite interesting now. That one's moved to high point of the day. I think Mindtree, the stock we spotted at 230, that's moved to the high point. Most of this is short covering. This is just the danger of extrapolating one result into everything else, and then not getting follow through by the end of the day and seeing that kind of move, because obviously TCS did play out. Perhaps the short term TCS did play out a bit, but to extrapolate that into entire sector, and if you did that in the morning, that's where perhaps you got stuck here. And that's what's happening right now with the last time move on.
Oh, absolutely. In fact, a lot of the mid-cap IT names as well, along with Mindtree, you've got Hexaware, KPIT Tech, a lot of these stocks are really getting quite excited. The Nifty is still 32 lower, the Sensex about 100 points lower. Ganesh Ram, so talking about the market as a whole, I mean, we have been in a range for the better part of the last 1.5 to 2 months now. It's a 400, 450 point band on the Nifty. Do you see this continuing till the elections perhaps, or do you see a breakout on either side?
We don't think elections are something that we give too much importance in how we prepare ourselves, but I think the clouds which we have been watching and the reasons why we are cautious are more fundamental, and that we are seeing the first signs of some clearing in that. This is more on the macro level. We should see that sustaining. If that sustains, we will get a little more positive, but we do see earnings expectations for the remainder of fiscal 19 and fiscal 20 moderating. That's the key reason we are remaining cautious still. Those expectations need to get a lot more moderated, both on volume growth, margins, and also the kind of valuations, multiples which have been assigned. We need to see that getting moderated. For the first half of fiscal 19, while earnings growth was about mid-teens, cash flow started moderating, and that came down to almost low single digits. This number was growing at about close to 18% over the previous 3 years. And we do believe that somewhere the collective wisdom of the market does look at operating cash flows, free cash flows, not just earnings. And that moderating is due to working capital requirements elongating. Both inventory and receivables are quite, the levels have gone up, and that is something that we are keeping an eye out on. Cost of capital is also gone up, possibly about 100 basis points. We do see these two having a negative effect on stock prices. That is not yet played out fully. We will want to watch out we believe we are still maybe just a quarter into that earnings downgrade cycle, which we still see another 2 quarters left. We need to see FY20 earnings expectations, which are still running around 20% mark, come down to possibly 12-13%. And that's where we think we'll get a little more constructive.
The market seeing quite a bit of recovery. In fact, Bank Nifty recovered 100 points from the intraday low, and the Nifty as well is seeing gains. And really, the move is in IT is quite interesting. The way some of these stocks have moved. HCL Tech, in fact, now at high point. Tech Mahindra at high point. You have Infosys at high point. It's, the index is down because TCS is still down, but the rest of the pack has moved. And how? Ashwini is with us for some BTST calls. Ashwini, thoughts on index and your stock calls?
See, my idea on this tech move is that it's probably the rupee, because okay, TCS impacts Infosys. I don't think it impacts Mindtree, NIT Tech, KPIT, and the entire thing, because crude has had a nice rally in the last half an hour. It's now 62.32, and maybe this financial IT trade could be reversing, so where financials could give up some ground and IT could take on that is my kind of theory, because otherwise all these guys moving together may not make a lot of sense. Having said all of that, today again we have 10,750 as intraday low. As and when that low gets taken out, maybe with a gap, or the high gets taken out again with a gap, that is when you should expect big sharp moves. Otherwise, it will be the same story. Half the sectors going up, other half coming off. Having said that, Mindtree is a buy with a stop of 820, target of 845. I think IndusInd Bank will have more downside, so that's a sell with a stop of 1540, target of 1500. And Bank of Baroda is a sell with a stop of 124, target of 112.
Okay, by the way, let's pull up 2 more stocks. ICICI Bank, the intraday graph, and let's also get Reliance on the screen, because along with the IT big boys, it's also these 2 major stocks that, look at that, ICICI Bank almost in positive territory. Also, Reliance has moved quite swiftly from the lows. These 2 are also helping matters, 10,808. So, Anuj, not just IT, the fact that some of these other majors are also moving, I mean, does it give hope for the bulls for the next, I mean, is it looking at next week perhaps?
The buy on dips is intact. That's one point. 10,750, you'll remember, Surabhi, last time also acted as a major level. Today, the market gave you perhaps that opportunity. The problem is market is punishing you if you're chasing gap ups or if you're selling into gap downs. So that's the problem. And again, I would reiterate one point, Surabhi. Don't extrapolate anything into one result. This whole for me this IT move is essentially just market punishing that trade, that extrapolation. Nothing else, nothing more. And I won't read too much into this move in this upside as well, because for all if Infosys also comes out and says something nasty, suppose by the end of the day,
Monday could be a very
Monday
different
morning,
session,
you could again be looking at IT going down and the index going down. So that way, these moves look quite okay. Sometimes, and not all moves can be explained. Sometimes it's just one of those moves that played out in the morning. People got short. Now they're covering. Delivery volumes would be very low. I think TCS, it would be very large. Other than TCS, I think all the delivery volumes in these stocks would be very low. So it's more a play of, second half short covering.
Absolutely. Overall, volumes are slightly low on the lower side today anyway in the market. By the way, should also keep an eye out on global indices, because European markets have been doing well. Most of Asia also closed out positive. So maybe it's also a little bit of a catch-up that the Indian market finally is willing to play with this recovery that we have seen in the last half hour. That's the picture across Europe for the time being. Prakash Diwan is still with us. Prakash, okay, back to some stocks that have been interesting this week. One is Praj Industries. I mean, they're starting this compressed biogas plant now. So I don't know, how long the play on that lasts. And the other that caught my eye today was CESC. Any thoughts on these 2?
Yeah. No, so CESC has been a little bit of a surprise to me, because there's nothing much that I've come across which changes things fundamentally for them, especially now that they're only a power play, distribution and generation. But interestingly, Praj, is now kind of getting some more wings. What seems to have happened is that people who have been holding Praj for the longest of time have kind of seen it go beyond this 120 to 125 zone, and everybody's got an exit. It is out of sheer desperation and that long wait that people have moved out. And now whatever is happening in terms of the positive news flow is getting supported with some fresh buying, which could see much more staying power, which means fundamentals could change. They've also got this ethanol trigger, that is a very major headwind that's positively impacting their business. And I think the top line and margins both will start going through a little bit of a re-rating. And that's exactly what the market is betting on. And this is going to happen to a lot of companies. So I've been talking about the battery players, for example. Why I wouldn't be surprised at all if there is some very major incentivization for battery manufacturers or for that value chain on the EV side in the budget, for example, or the vote of account or whatever. And look at the way Amar Raja has started moving. Look at the way Exide has been holding resilience for so long at this juncture of 260 or wherever it is. So some of these plays are the ones that will make you wait, test your patience. But when the breakout happens, they could very easily give you that first 25-30% move in a short span. So I think we are looking at the market, we are looking at stocks specifically to behave in that fashion more than a secular uptrend in any particular sector.
Okay, Prakash, we leave it there. Have a good weekend, and if I'm not wrong, I think you have a tinge of Punjabi in you. So happy Lodi to you in advance. It's on Sunday, I think. So
thank you. Same to you.
Okay. Of course, there's no tinge or half or 40% about Punjabi in Ashwini. Ashwini is full Punjabi, right, Ashwini? So happy
big Lodi.
Lodi.
It's a big Lodi party. I'm sure that Ashwini is already planning.
So big Lodi party being planned,
There's
Ashwini.
a restaurant in Delhi called Punjabi by Nature.
Yes. Of course, we've all been there, Ashwini.
Ashwini, you forget, Anuj and me also have a tinge or more than a tinge of Delhi in us, right? So yes.
My wife is Punjabi, so to be on the safe side, I'm now 100% Punjabi.
Good point. Good idea.
Okay. Anyway, on that note, let's get serious once again. Gautam Sinha Roy, fund manager at Motilal Oswal AMC, now joins us. Gautam, hi, good afternoon. Thanks a lot for joining us. It's been a very volatile phase for the market, but the market's given some indication that it's rewarding you for buying decent stocks. October onwards, the market breadth has been good. Leave out autos, the rest of the market has done fairly okay. Your thoughts?
I think what has changed substantially through the course of 2018 is that valuations are not as crazily expensive as they were at the beginning of the year. And the dispersion of valuations across sectors and market caps, that's also corrected. So mid cap and small cap is not that expensive. I think that's the major thing, Anuj. Besides that, not much has changed. Probably the growth story has changed from sector to sector, but valuations are a lot more reasonable, and that's the major change in my mind.
Okay. Gautam, season's greetings. It's still the new year, so happy new year to you. Now, I want to start with the sector that's got everybody interested and engaged. Earnings season, IT is the talking point. And you own a lot of IT across your funds. It's almost 12-13% of holding, depending on which fund I'm looking at. Now, given the slightly subdued commentary that we've got from TCS, this concern on margins, cost pressures, does that worry you at all?
Well, the cost pressure which has come in for the companies is an incremental worry. But on the demand side, things continue to look reasonable, and cost pressure is also a function of the great hiring environment in the US. So let's see how long-lasting that is. Structurally, I don't think we are very worried about any of the changes, but yeah, that really lowers the growth, PAT growth that investors are going to get because of incremental margin pressures. So one has to live with it. What has happened through the course of 2018 is that, well, earnings have grown strongly, but there has also been a bit of a valuation re-rating. So the best of returns for IT are clearly over, probably the second best performing sector or one of the best performing sectors in 2018. So can that get repeated? Probably not, but it's not like it's an end of story or anything like that. I think the biggest continuing positive for Indian IT is that they had a credible play on digital, which is the high growing part of IT now. So that transformation from the so-called old technologies to the new technologies which Indian IT had to play out, that they have done, and that's pretty much there. So that's behind us. I think that used to be the big worry because of which valuations had come down. So from that level, valuation re-rating is completely justified because they are winning in the new technologies. So that continues to be the case. Digital continues to grow strongly. So I remain invested, I remain faithful, yeah, but there are medium-term, near-term worries on the margin which have come in lately. So we'll have to adjust to that. Valuations, or rather the earnings, would have to adjust to that over a period of time.
Two poster boys of the bull market, Gautam, Eicher Motors and Maruti. What's gone wrong here? Or you think as a fund manager, this is giving you an opportunity to accumulate these stocks?
Well, Anuj, if you see, again, as I said, broadly valuations have corrected through the course of 2018. And for both these companies, that's been quite a remarkable change in valuation from where we started, let's say where we were 1 year back and where we are today. What has also changed over the course of the last 3 months in the festive season and after that has been the growth and the growth outlook. But one has to really think more long-term in these stories, whether the stories have broken. To our mind, definitely not. The long-term growth story, penetration and premiumization being the two major levers of growth for autos, consumer autos in India, that continues to remain very much intact to our minds. For long-term investors with the subdued PE multiples, definitely it gives you an opportunity to buy. Probably one doesn't need to hurry because near-term outlook continues to be a bit clouded on the growth side, on the demand side. But yeah, this is giving another opportunity for long-term investors in these stocks.
So Gautam, again, when I saw the portfolio, the one major cyclical stock that's one of your key holdings, it's in the top 10. I mean, there's only L&T that one really finds there when you're talking in economy, infra, and cyclicals. Are you looking to change that at all in 2019? Are you a believer in this talk about private sector capex revival?
So private sector capex revival has been an off and on story, right? So it's not like we are seeing major V-shaped recovery in private sector capex. What has actually aided the capex recovery cycle, including I would say for L&T especially, is the infra capex by the government sector. So that continues to be the story largely, and of late with the elections coming in, there would be some slowdown in order booking that would also happen. But another factor is, if you look at the plays there are not too many, right? So you have to be very selective. There are only a few select plays. When you look at the broad-based kind of capex recovery story, there probably is only one out there. But if you want to play a basket of stories, then you really have to get into the mid-caps, the high-quality, typically MNC kind of capital goods or engineering names, and they are credible plays on a revival cycle, but many of them are quite expensive too. So it's not that there's a lot of money to be made from that perspective. And as we see it, it's not like a V-shaped recovery, it's a gradual recovery. It's not like it's an extraordinarily attractive space for us. It's a good space, but one has to be selective.
Okay. Have you removed oil marketing companies from your portfolio now, Gautam? Because the way it played out disappointed a lot of people. Now they're back to making all-time high margin on petrol and diesel, but the market is in no mood to give them the valuation that it gave them about 6 months back.
So one has to be patient with that. There is obviously market is not giving them the valuation today. Doesn't mean that the market is not going to give them the valuation ever. As long as the business fundamentals remain strong and intact, that is what matters. I think on oil refining side, what has happened of late is there are clearly signs of GRM compression globally, and that is GRM is a global cyclical, so that plays out in its own cycle. So that is also affecting valuation. One has to be patient with these names. It's not that the story is broken or anything like that. It's just a cyclical phase that one is living through.
Okay, Gautam, we will leave it on that note for today. Then thanks very much. Let's see how some of these aspects go around over the next couple of weeks. Thanks for joining us today. Quick break, 10 minutes to go before the week and the day closes out. And the Nifty, again, a little wobbly, 10,788. So that recovery is also not entirely stabilizing. We'll come back and count down to the close.